Hi everyone, welcome to Starting Out channel. Today I am going to share about Stashaway, a robo-advisor in Singapore. Robo-advisors are online investment platforms that provides automated financial guidance and services. They are ideal for majority of people who wants to invest but not sure about how they can do it, or afraid to go straight into trading platforms like Moomoo and Tiger Brokers. Please note I am not a financial advisor and my video does not represent any professional advice. All investments comes at a risk of losing your initial capital, so you are encouraged to exercise due diligence for any investments. As a precaution against market crash, it is ideal to keep 6 months of emergency funds in a bank where you can access it instantly before making any investments. I will share the core aspects in this video. 1. Is Stashaway safe for us to invest? 2. What can Stashaway help you to achieve? 3. What portfolios does Stashaway offers? 4. My portfolio with Stashaway. 5. Fees. 6. My thoughts about Stashaway. Stashaway is licensed by Monetary Authority of Singapore, so they have been through stringent checks in order to operate in Singapore. Your funds are in a custodian account that is completely separate from their operational funds. As both funds are completely segregated, even in the highly unlikely chance of a Stashaway closing down, your funds will not be emptied. Stashaway offers fully managed investment portfolios with no minimum entry or lock-in. You can consider investing with them to grow your wealth along the years. Do note they are investing in ETFs, so there will be up and down like the stock markets. ETFs are not as volatile as individual stocks because it contains a number of companies in one basket, but still, you will experience market swings, so be prepared for it. Stashaway Approach different as compared to other robo-advisors in Singapore. They used systems in place to determine your key objective in investing and helping you to calculate the amount and duration you needed to achieve your goal. We look at the first portfolio, general investing, which you can fund with cash or SRS. You may choose to go for core balanced or higher risk portfolios. Core balanced are designed for you to experience less drastic short-term ups and downs, while higher risk portfolio may give you higher returns over long terms but will fluctuate more. Your Stashaway risk index vary based on your selection. You can adjust the meter to determine the amount of risks you are willing to take. At the same time, the assets allocation will be shown below to see where your funds will be allocated. A portfolio with 6.5% risk index will have majority of your funds allocated into government bonds, corporate bonds and fixed income. Only 8% will be allocated towards equities. You can use their sample projection graph to determine the projected gains after a number of years. Assuming I went for 22% risk index and deposited one lump sum of $10,000, my projected returns after 10 years will be around $17,692 or higher depending on the market. Please do not take these figures as actual gains because no one can predict the future. The second portfolio will be goal-based investing. You will be asked to select from a list of goals. Assuming you want to invest in order to purchase a new vehicle in 5 years, and depending on your loan percentage, the system will provide you an estimated monthly investment goal. Do note this data is just a guideline and Stashaway probably based it on average. You are advised to do your own financial planning when it comes to purchasing a car. Stashaway will then propose a portfolio for you based on their algorithm showing what are your assets classes and projected figures. Generally, the algorithm works similarly between different goals, just that each system have different end goal amount required. The third is income portfolio, where risk level is fixed at 12% with majority assets in bonds. You will need a minimum of $10,000 to start. This portfolio aims to give you dividend income annually. Each of their invested ETF and bonds will give out dividends either quarterly, semi-annually or annually. Based on their calculations, to earn a projected income of $1,000 annually, you need to invest a lump sum of $32,258 in year 0. If you are looking for higher returns, I will recommend going for growth instead of passive income. Stashaway also offers Stashaway Simple, a saving accounts yielding up to 1.2% per annum. If you are storing your money in the bank earning little interest, Stashaway Simple may be ideal for you to earn a little more interest. Do note it will take a few days to process your withdrawal. Here are my investments in Stashaway. I invested $3,000 in 80% equity and 20% fixed income portfolio on the 14th of June. Between that period to the 25th of July, there are ups and downs and the returns are lower as compared to the rest of robo-advisors. I further increased my investments by $1,200, totaling up to $4,200. As of the 3rd of August 2021, I made a paper loss of $108.39. I was hoping for better results, but based on what I understand, the recent China crackdown on China tech companies plays a major role in people dumping stocks. That is when I decided to purchase more of Alibaba shares at a lower price on trading platforms. Stashaway recently made adjustments to their portfolio weightage. They added in Australia ETF by decreasing US equity holdings, sold MSCI All-Country Asia ex-Japan ETF and Emerging Markets ETF. Not sure this is a good idea, but hopefully their vision works out in the future. Next up is fees. For all investment portfolios, their fee starts off with 0.8% per annum for the first $25,000 and it will decrease as you increase your investments. You have to add funds expense ratio charged between 0.2% to 0.4% per annum. That adds up your total fees to 1.2%. My fees will be around $50.40 as I invested $4,200. In summary, I felt Stashaway have a different approach as compared to Syfe, MoneyOwl and Endowis. I invested in all three platforms around the same period and Stashaway is the only one giving negative returns. That being said, I am looking at long-term returns so I am not affected by temporarily loss. Who knows, they may even bounce up higher when markets recover. I will continue to leave my money in Stashaway because sometimes, seeing negative is much better than positive. With that, I have come to the end of the video. I will be doing more videos on investments related video in time to come, so you can choose which is suitable for you. Please subscribe and click the like button for more starting out videos. Comment down below if you think I should continue investing with Stashaway. If you are interested in trying out, you can use my link in the description box. Thank you for watching. Let's start investing today. Jamesy signing off.